Well, good day, all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, and we're on the 27th of January, 2023. So the big event of the day was the core PCE, I think the year over year, one of the Fed's favorite numbers, and it fell 0.3. And I think that's very important. It shows the Fed is on the road to where it wants to go. So the question, and you're going to hear a lot of questions and arguments starting next week, the Fed will go with a quarter-point hike. There's no reason not to. Forget a half-point hike. They're going to go quarter. They could always go a half, but I don't think they're going to. And then the argument will begin, do they really need to go another quarter after that? I happen to think that they have to put the nail in the coffin and make sure that this stays. Again, what word does Fed Chair Powell use when things get rough? Paul Volcker. And he doesn't want to pull back and then have to go again and raise interest rates. That's the thing he's trying to avoid. That's what Volcker had to do. It's what he doesn't want to do. So I think it's simple. At quarter-point hikes, you go this one, you probably go one more, and the big debate begins after that. Do you have to go a third one, or do you sit for a while to see what it is? Sitting isn't not putting out a rate. You can always go with the quarter. They can pass one. There's a very big difference between dropping a rate and then having to go back up. The bets are that sometime in 2024 we'll get a full point of cuts. So we'll see if that works out or not. All right. So what did that do? Well, that put a bit of euphoria in the stock market. But in front of the FOMC meeting, it got trimmed back. You got up to 34,241. You gave up 200 points off the top there. You gave up here 80 points. So you can see what was going on. And that's what I actually figured. I was looking at it and going to myself, I wouldn't want to press this market one way or the other. Now, for me, in the financials, the area to be this week had been the currencies, and my clients have done really well in them, and in the gold market. And I've been trimming positions back, and FOMC gets me doing that. Certain people love to go into those. I'm not one of those characters. When I look at the S&P, I'm going to repeat. If you're a monthly chart person, this is a bear market rally that could get up to the 4210 area, but you haven't proven that you can stay over that number. That's one of the charts. When you look at a weekly chart of closes, you can see that you're over it, so you have the bullish bias, and you have since back here. So that's interesting in itself. When we look at the S&P 500 index, we're now coming back into a better layer of resistance. So we're now have been in here. I expect a bit more churn right in front of the FOMC meeting, and then the game gets real interesting. When we take a look at the swing line has a higher high and a lower low. There's not a lot you want to do with that. That just means to me that you're in noise at this point in time. Yeah, it's got an upside bias, but it's still not a trend where you're making higher lows, higher highs. And what you did is, this is, remember, a weekly chart. So what was it, 6 weeks ago or so, you fell back, hit the 18-day average, kept hugging it for almost, 4 weeks? Now you've popped to the upside. If you can continue to pop, well, the 4206 area, the 100-week average is there, and the Bollinger Band's with it. So that's going to be a very strong resistance area. And momentum, you're overbought. So I don't believe, the way I teach charting, that you now put on new trades. Now you start liquidating down, get ready for the FOMC, let it do the typical yin-yang. We get the announcement at 1 o'clock. Come 1:30, the Fed chair is going to talk. Asia's closed. Look at the time zones. People are going to bed. Europe, by 1:30 here, it's 7 at night, 7:30 in areas. They're not doing anything. He finishes. We react for the next hour and a half in the markets. Then you have to see how Asia interprets what he said, and Europe, and then you're back into square one. So very quickly on Thursday, you'll have a feel where this market is. And that's Thursday. He comes out on Wednesday. The battleground is very nicely showing up in the Dow. Look at how you're fighting at the 100-week average of closes, and you're overbought. The NASDAQ is stronger, but you're up to the Bollinger Band. What do I teach in my enhanced Bollinger Band course? And I'm going to repeat something. You want to learn how to work with Bollinger Bands because a couple of things. Number one, if you're not embedded, there's one set of rules when you get overbought or oversold. There's another set of rules when you're embedded and you get up to this number. Embedded means, let's see if I even have one here. I don't know if I do. Yes, this is embedded. And when you get that, until you turn down, the market keeps getting bought. So the first time you hit the band, you have one set of rules. And when you lose the embedded, you have another set. Let me teach it to you. At the end of this, we'll be running an ad on it. Go to the website, get this for yourself. It's going to change your trading if you're a Bollinger Band trader with an open perspective on it. Okay, it's going to be a whole different way you look at it. I change things. I play around with the values of the slow stochastic as well. When you subscribe, I'll give you my values as well. Okay, so we have a lower low, higher high into resistance. I think the Russell will be joining if we get up there at the NASDAQ and a big resistance area, overbought, same thing, been in bull trends in both. In the bonds, you got up already up here fighting at the upper Bollinger Band, slipping back. And if you look at the daily chart, you already fell to the 18-day average of closes here and in the 10-year. And you could see you got up here, you're not embedded. Again, that rule comes into play. In the dollar index, so you've had a bearish embedded reading. The market's been under pressure. It's not over. But I'll tell you ahead of time. I'm going to tell my traders that are short the dollar. We ended up this week taking some profit on this break already. And I don't want a position going into the FOMC meeting. I like to enjoy myself. Sit back, take what little hair I have on my face and go, how would I react to that? What's going to be the others? Look at the chart overnight and in the morning and then make my moves again. It's like a reset. Ever play pinball and you tilt the thing and you hit the reset button? It was the greatest. And I was a heck of a pinball player, by the way. In the eurocurrency, lower low, higher high, big resistance up here. I'm targeting that over time. See, I think we're going to stop, and I think the European Central Bank's going to keep going. And I think that because of the higher interest rate coming there, people will flock to the one that's going to give you the pop and the money. That's just what money does. It runs around looking for a better home. In the Canadian dollar, certainly in the bull camp on the weekly charts, but overbought. Got time. Don't chase overbought markets is what I teach. I am bullish in the yen. I'm looking for pullbacks to buy. Why? You got an embedded reading. No reason not to be looking at that. Plus, we're going to have the Mr. Kuroda stepping down. Each day that goes by, we get closer to him stepping down. New blood. What are they going to do? Change monetary policy. What does that mean? Bitcoin. We're now up into resistance. And by the way, today I was very bullish on Bitcoin. Had clients. They did fairly well on it, I'm happy to say. But now I'm concerned, all right? I didn't pay attention enough. Why am I buying a Bollinger Band? Mad at myself. Still did okay. In Brent versus WTI, well, you're up and over these averages, but the daily charts haven't turned bullish in Brent or WTI. So I just wonder if this isn't the bear market rally that's going to get a bit of a failure up here in the near term. Be careful is what I'm saying. You can see how it's working right there. Let's just see, by the way. This is crude. Yeah, I want to make sure I got my titles right, and I do. Okay, gasoline. I think that you've got a bottom in place already for the spring, summer months. So I'm looking at the market on pullbacks to give me the ultimate buy where you get the seasonals to the upside. And that's what I think is going to happen in that market. So you put it together, you come up with game plans. And I can't emphasize this enough. I want to teach you how to work with one of the highest profile trades I know. And that is these Bollinger Bands when they're either embedded or not. Look at this, go out, go onto our website at the area that says education, take a look at the course, and learn. Can I make it easier? If you need be, I'll move my cursor up there, and what will happen is you get to see that. But go to the website. That'll take you right there. I'm Ira Epstein.